So we've got 14 minutes left in the trading session as we await the Q&A at the White House with the president. In the meantime, joining us, they're lucky, the lucky ones that get to explain to us what's going on today. Divine Capital founder and CEO Danny Hughes and the CEO of Mahoney Asset Management, Ken Mahoney. Welcome back to both of you. What a crazy day. I think our interviews would have been different if we did them first thing this morning when the Dow was down 258, but now we're up 165.
That's exactly right. And this has been the kind of market where you do have to wait it out. You have to see how things are going to, how people are going to distill the knowledge of what just happened and really understand where they're going to place themselves. And I think a lot of what happened, we had the labor market numbers, which were lousy, and we got August revised, which was also lousy. But I think people sat back and said, okay, so maybe that means in December we don't see a rate hike. And maybe that means that because of the prevailing winds of what's going on in the emerging markets in China, falling down, I think that means that, risk is still on. Put your money back in the stock market, because where else are you going to get a return?
Does it mean, though, Ken, if the market's now rallying as the dollar's a little bit weaker and we're pushing out expectations for a Fed rate hike, do we still want to be stuck in that kind of paradigm?
Really, not really, right? You really have some strength. You really see the Fed, our economy can't withstand a quarter rate hike, a half rate hike, but we don't have to worry about this today, guys, because come Monday, this market has amnesia, right? The randomness of this market. Come Monday, we may forget about this nice intraday reversal.
Well, the amnesia is practically minute to minute.
Yeah, minute to minute. So
right?
It's a schizophrenic type of market. It's hard to get in there. The only thing we're trying to do for investors is be a little bit more active, try to get some bids and sell into some offers and, just kind of create your own performance, because this is so random at this moment.
Well, we've been talking about this week. Is it really trading on fundamentals, or is this a technically driven market? It felt like maybe we hit some levels that the market was comfortable getting back into first thing this week.
Yeah, I think, first and foremost, it's a Fed-driven market, unfortunately. And you're right, to your point, a quarter of a point, who cares, really? I think that would be a healthy bump for the market, but really that's not what.
But don't you think that Janet Yellen would have egg on her face if they raised 2 weeks ago and then we get this jobs report this morning? I think they're breathing a sigh of relief this morning, don't you?
100%. That would have been such a proactive gaffe on the part of the Fed. So I think that they are breathing a lot easier because of that. But, long term, this is the kind of market where if you're looking at a long-term 5, 10, 50-year investor, you're picking spots in things like energy and materials where you're actually getting a phenomenal return on some names that can withstand these kinds of markets.
That's what I was going to ask, Ken. What parts of the market are you buying into here? Yeah,
we do like energy a little bit. The area that we used to like was biotechnology, but put a wet blanket over that. Hillary Clinton made some comments, other politicians. Now it's in the crosshairs of the public. When we start debating, we were talking about pharmaceutical. We used to love this little farm system for pharmaceuticals. So biotech now, we're actually selling into some rallies. We generally like large cap ETFs, domestic, that pay dividends. We actually think going forward, 3/4 of performance is going to come back to dividends. Kind of go the old-fashioned way when it comes to markets.
All right.
Looking at dividends.
Yep. Utilities did well in the third quarter for that very reason. Thank you both. Good to see you.
Good to see you guys.
We'll come back.